Hi, how's it going everyone? My name is Henk and welcome back to the channel. Now, in a previous video that I have done, I mentioned the 4 companies that stand to benefit most from the Trans-Tasman bubble. And one of the companies that I mentioned was Auckland International Airport. Now, in this video, I'm going to take a deeper dive into Auckland International Airport Company and look at their financials and see whether or not they are on the road of recovery from the lockdown situation. So let's get straight into it. In early April, the New Zealand government announced the Trans-Tasman bubble to be starting on the 19th of April, which means that there won't be any quarantine between certain parts of Australia and New Zealand. Obviously, this is a big boost for the tourism industry for both of the countries, and there are certain companies that are expected to see a huge boost. And Auckland Airport stands to benefit quite a lot from the Trans-Tasman bubble. However, the outbreak of the virus in Australia, especially in New South Wales and Queensland, has led to a suspension of the quarantine-free travel bubble with Australia. So obviously all of this start and stop bubble restrictions have affected Auckland International Airport. But first, let's go back and look at the financials of Auckland International Airport to see how hard the lockdowns have affected Auckland International Airport within the past year. The total revenue for Auckland International Airport has been steadily increasing over the 3 years before all of the lockdown that has happened. And obviously in 2020, it suffered massively by all of the lockdown restrictions, which see their passenger amount decrease by around 90% for all international passengers. Since then, net income for Auckland International Airport has also fallen off a cliff from 650 million in the financial year of 2018 all the way down to 193 million in 2020, and so far at only $74 million for the trailing 12 months. So obviously all of the lockdowns have a very significant effect on the operations and profits of Auckland International Airport. But let's take a look at their latest 6-month period financial results to see if it's on the way of bouncing back. So in the latest half-year presentation for Auckland Airport in February of 2021, the revenue for the first 6-month period is at $131 million, which is down by 64%. And a profit after tax is at $28 million, which is down by around 80% compared to the same period of time of the previous year. Also, the number of passengers is also down by more than 70%, and because of that, they have suspended their dividend payment. So not only the profit from the airline has been significantly affected, the profits from the retail income has also been severely affected, and along with that, the revenue from the airport hotels. And because of all of that, Auckland Airport reported its first underlying loss in the airport's history. So as I mentioned previously, the revenue is down by around 65%, and their underlying loss is around $10 million compared to a gain of $140 million the previous period, which is more than 100% a decrease. Now, in terms of recovery, Australia is Auckland Airport's largest international market, which is 3 times as great as the second largest market, which is the USA. So having a quarantine-free travel between Australia and New Zealand would provide a significant boost to the local tourism and would provide a healthy boost to the profits for Auckland International Airport. So it is absolutely essential that this quarantine-free travel still exists between Australia and New Zealand. Looking at the future guidance for Auckland International Airport, they are expecting a earnings guidance for the 2021 financial year of a loss between 35 million and 55 million New Zealand dollars. And because of that, No dividend will be declared for the financial year of 2021. However, a bright spot will be the monthly traffic update. So in April of 2021, the total passenger volume increased by more than 1,500% in April of 2021 versus the previous year with all the lockdown happening. And in May of 2021, the total passenger volume increased by more than 700% compared to May of the year 2020. So all of the passengers have been increasing at a significant rate, which is a very good sign for the future of the company. If we take a look at the other financials for Auckland International Airport, they have a P/E ratio of 140, which is extremely high, and it's the kind of P/E ratio that you would see on a fast-growing tech company, which, of course, Auckland International Airport is not a tech company. So just from its P/E ratio, you can say that the share price is far too high than what it reasonably should be. Looking at its other financial figure, it doesn't paint a pretty sign either. So its return on equity is around 1%, which is absolutely terrible in terms of a company. And its revenue growth is still expected to be in the negatives for the upcoming financial year. The only silver lining here is that they do have more current assets than current liabilities. However, they couldn't even be considered as a dividend stock because they have suspended their dividend payment due to all the uncertainties that has been going around. If we have a look at the share price for Auckland International Airport, obviously during the lockdown of March last year, it had a giant dip, and then it kind of bounced back to around the $7.20 region. And since then, it has been trading within a range between $8 and around $6.80. And currently, it's just bouncing around within this range. Over on Market Screener, 8 analysts gave Auckland International Airport an average target price of $7.13 per share, which is slightly lower than the current trading price of around $7.40 for Auckland International Airport, which means that analysts do not expect the price for Auckland International Airport to be increasing significantly. Now, recently on the 5th of July, there has been talks of a takeover bid of the Sydney airport, which has a cascading effect that boosted the Auckland airport share prices. However, the boost was short-lived as investors took that as an opportunity to sell off Auckland International Airport shares. So ultimately, the news didn't really amount to a ton of difference within the short term. However, Auckland Airport did experience one of the biggest surge in domestic travelers due to the July school holidays, and they have experienced the highest number of travelers since March of 2020. In a market update provided by Auckland Airport in the 1st of July, they have stated that ongoing uncertainty around international travel is expected to impact passenger numbers and related revenue for the remainder of the calendar year. One of the other things mentioned in the market update was that the guidance for the financial year of 2021 is to remain unchanged, with a loss after tax of between $35 million and $55 million. Overall, Auckland Airport CEO is predicting that the company is poised to take off early next year, but a lot of it will depend on all of the vaccine rollout. So what do I personally think of Auckland International Airport stock? Obviously, it's a very beaten down company due to all of the lockdowns that has happened over the past year or so. However, it is the largest operating international airport within New Zealand. So once all the vaccines have rolled out and the world has gone pretty much back to normal, it is pretty much expected that the share price for Auckland International Airport would bounce back eventually over time. Now, this might take a significant amount of time to achieve, considering how slow New Zealand is at opening up its borders to other countries around the world. And overall, New Zealand seems to be quite content to guard themselves in their safe little spot away from all of the other countries. So yes, if you have a extremely long period of investment time frame, this might be a good opportunity to pick up Auckland International Airport at a discounted price. But just beware that you may potentially have to hold on to this particular company for a very extended period of time before seeing much significant price action. And that's it for this video. Let me know what you think, and I will see you in the next one. Peace.